Welcome back. Well, let's get talking to another company then. Akzo Nobel, the paint company, is in focus. It reported what was good revenue growth in the second quarter, while margins saw some amount of pressure. Rajiv Rajgopal, the managing director of the company, is joining in to discuss their second quarter performance. Mr. Rajgopal, hi. Welcome to the show. I just wanted to start by asking you about demand as a whole. You've shown revenue growth of around 25% on a year-on-year basis. Can you break it up for us in terms of what the consumer or retail-focused demand was this quarter, and how much of it was from the industrial business?
So good morning, Ekta. Good morning to you and Mangalam. Wonderful to be back on your channel. Yes, last quarter was quite an excellent quarter. We've seen secular growth, to be honest. We've seen high double-digit, 25% odd growth. So if you look at the decorative paints business, it was pretty much in line with the overall growth. So actually, all the five businesses were within a couple of percent points of each other. So a range starting from about 23 to about 27, with one of the odd businesses even touching almost close to 30%. So it was indeed a very strong quarter. Coming to your question in terms of demand. So obviously the demand was fairly robust. Having said that, October was a bit tepid, primarily because of monsoons, which sort of impacted. However, the last quarter, I think I must say that I was pretty pleased that the strategy that we've sort of outlined for India over the last couple of years was being executed well.
Right. Just a couple of numbers from you, Rajiv, would be helpful. You said in your presentation that most of the growth this time around was price-led. So how much of that was volume-led in the second quarter? And, your market share, because everyone else have been saying that they've increased their market share. This morning we had Berger as well saying that they've increased their market share by about 80 basis points. So where does your market share stand at currently, and the volume growth in the second quarter?
So Mangalam, let me first take the question on volume. We've had a high single-digit volume growth. The price growth is quite uniform across the industry now. So pretty much, hence, if you sort of derive our number, market share is a derived number. Now, with all the results getting reported for the industry as of yesterday, clearly we've gained market share, right? The reason we don't sort of really talk about it is, remember, we are the number 4 player in the industry, and we're really clawing our way back of some market share that we had lost in 2017, 18, and early part of 19, really. Where do we stand? We are getting now close to 5.5% to 6% on the paints business, about 7.5%, 8% on the overall business. But really, we've still got a long way to go. Yeah. From my perspective, I think what really stands out is that all the businesses, whether it's decorative paints, automotive, marine and protective, the powder business, and industrial coatings, all the 5 businesses grew very well this quarter. And we've seen that after a pretty long time. So really glad that the strategy seems to be working. I think we have to be persistent about it, keep our eyes on the ground, make sure that we are continuing to execute it. Yeah, and obviously there will be the occasional bump on the road, making sure that we don't sort of question strategy when we have the bump on the road.
Okay. Overall, in terms of marketing spends and advertising, we just spoke to Berger Paints just a couple of minutes ago, or maybe an hour back, and he mentioned that there's probably not much need, simply because the number of players remain the same. The competitive intensity is within this entire group of players. What is your sense in terms of ad spend? It's around 3.5% to 4% odd. Do you feel a need to increase it? What is your strategy there? How would it impact margins in any way?
So, Ekta, to be boringly consistent with what I've said prior to Nigel and Mangalam in my last interview, we've said that we would take it up to 5% to 6%, and we are pretty much on it. If you really look at why the revenue growth didn't completely translate into an EBIT and sort of growth, is primarily because last quarter we actually overspent on advertising, and that's a conscious call, because after a couple of years we've got some very good creatives. Our flagship brand Dulux Velvet Touch was on air. We in fact made it a point to also be on Asia Cup. So really, we are right now making sure that the brand recall, we get back to our old days of glory, and that's something that is going to be a continued journey. We've got more coming up, in the quarters ahead, and you will see that as we move forward. But really, differentiating our brands, making sure our propositions speak to a consumer, and making sure we get that customer connect is an ongoing journey.
All right, since you alluded to the last conversation that we had, let's take it from there itself. You know, the last time you joined us, Rajiv, you also said that by the fourth quarter, your margins will be back between the 15 and 17% range. Currently, it's about 11.5% in the second quarter. Do you stand by that? And, you know, by the end of this year, how many tinting machines and dealers would you have added?
So, Mangalam, you know, if you look at it, I think the variable, and I did mention it last time, is all the external factors. Yeah. So while crude has slightly corrected, I did tell you that, look, there is a forex impact too. And really, it's becoming very difficult to exactly predict when. We are seeing an improvement in the margins, you know, by about a point, 2 points that you've started seeing. But, you know, again, it's very early days. Our endeavor is and intent is to get closer to the 15 first, right? Before when I give you a range. So yes, I do see that, look, it may be first a 13 to 15 and then a 15 to 17 going forward. But look, that will come in. I think for me, really executing the strategy well, getting the right top line growth, gaining back the confidence on the brand Dulux and all our brands, International, Interpon, you know, is really what the need of the hour is. And I must say the teams are doing an excellent job, as are reflected in our numbers in the last many quarters. You know, this is the almost the 8th or 9th quarter of high double-digit growth, and you've seen that. So really, I think we are focusing on the execution of our strategy. On tinting machines specifically, look, we add typically approximately about anywhere between 1,500 to 2,000 tinting machines a year. We add about 3,000 outlets a year. We are pretty much on track on that journey. Our endeavor was to move to 5,500 towns. We've crossed that. Now our intent is to get to 6,000 towns. We've got a 2-year target of reaching about 8,000 towns. Yeah, we've added coverage in almost about 155 districts in the country. And really, those are the metrics that we are chasing and targeting on the paints part of the business.
All right. Rajiv, always a pleasure speaking with you. Wish you good luck for the strategy that you have. And we will keep having these conversations every quarter as well. With that, we are out of time on this edition of Chartbusters, but you stay tuned to CNBC TV18. Trading Hour comes up next.